Let's talk about Soundhound AI and let me explain if I was wrong about this stock or not. At the time of making this video, Soundhound AI has a market cap of $8.36 billion. Year to date, it's up over 900%. And in the last 3 months alone, the stock is up over 370%. Now, we've touched on this stock a couple of times this year. The first time was back here under $2. Yes, you can check it. It's one of the first AI videos we did on the channel for the year. Then the stock went up already extremely quickly to around $10. Didn't make any sense. And then the stock stayed around $4 to $5 for, well, most of the year. And then more recently, especially after the US elections, the stock went on a tear. Now, you might say, okay, you were bearish on the stock when it was $5, now it's at $22, so you are 100% wrong. While I admit the stock went up 4x since the last time I touched on this stock. So yes, maybe I'm wrong on the stock price, but my reason behind it is still correct today. It does not make any sense. It's now trading at 56.9 times EV to sales in the next 12 months. Of course, when you compare it to the quantum computer names, it's still very, very cheap compared to them. They are trading at 100, 300, 400 times sales. So just looking at 56.8 times, that doesn't seem much. But looking at what's normal in the stock market, it's extremely high. And even previously at 20 times, this was still a lot. This was still a very, very high premium. And remember, if we look at what this company is expected to generate in the coming fiscal years, it's true that it's growing quickly, but we know that this is not organic growth. This is acquired growth. So yes, revenue for fiscal 24 is expected to be up 82.8%. It's probably going to be a bit higher than that. Then in fiscal 2025, it's expected to go by another 95.7% to reach $164 million. And then in fiscal 26, revenue is expected to grow 23% to reach $201.8 million. So even if we take the best case scenario, right, we go to 2026, it's higher than that. Let's say it's $250 million. Still, $250 million in sales when the market cap today is already at $8.3 billion. You know how much growth is already priced in today? Years and years of growth. And as you will see in this video, losses are increasing, although in fiscal 26, some analysts are expecting this company to have some free cash flow. So let's talk about all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Currently, the average analyst price target sits close to 50% lower than the price we're at today, but there are only 7 analysts covering this company. Now, if we look at free cash flows expectation, we can see that in fiscal 25, we see a solid improvement in free cash flow, though still negative, a solid improvement compared to fiscal 24. Then in fiscal 2026, some analysts are expecting this company to generate $26.1 million in free cash flow. Now looking at how they generate revenue, we can see they generate revenue through 3 segments here: licensing revenue, hosted services revenue, and professional services one. Of course, with the acquisition, we can see that hosted services revenue exploded in the last quarter. But then if we look at the other things, if we look at gross profit, if we look at net income, gross profit margin, I mean, this is not worthy of an $8+ billion market cap, right? Unless I'm missing something here. Looking at the previous quarter, revenue increased 89% year over year. That's including the acquisition. Then GAAP gross profit did also increase year over year by 26%. But GAAP gross profit is down 24.3 percentage points. Non-GAAP gross margins down 14 percentage points. GAAP operating loss increased by 132%. GAAP net loss also increased by 8%. If we look at total operating expenses, that has increased 111% year over year. Loss from operations increased by 132% year over year, and shares outstanding is up 48.9%. Now, of course, you don't really care that much about dilution when you are up close to 1,000% in just a year. Now, there are many reasons why Soundhound is up so much this year. There's growing demand for voice AI. There was that NVIDIA filing that showed that they are invested in the company. They have some strong partnerships. There is a lot of focus on conversational AI, increased investors' interest in AI in general, plus some positive analyst coverage, which the latest one came out from Wedbush. Yes, this is Dan Ives. Now, I'm not going to read all of it. You can pause the video and read it. But he put out a price target of $22. That's up from the previous $10. How do they reach that? Well, they say here, their $22 price target represents 4x their fiscal year 25 revenue estimate. Now, if we do the quick math here, 4x fiscal 25, that means $2 per share. Even if it's a typo and it has to be 40 times, that's still $18 per share, not 22. So yes, this makes 0 sense, and it's not the first time that Ives came out with these mistakes. You might have watched a Palantir video by Emir where he goes over a Palantir price target and explains why it does not make any sense. So you might ask yourself, is this just price chasing? Is this just another way to get some attention because the stock is up close to 1,000% this year? Maybe, but I thought, a name like Dan Ives, an analyst like him that gets a lot of attention, quite popular in the tech space, should not be making these types of amateurish mistakes, right? Unless I'm missing something here. Moving on to look at the stock, of course, last week we reached new all-time highs at around $25. RSI was over 90. Now this week we're starting the week a little bit weak. It's down 5.8%, but the overall market is quite red. Plus it was down, I believe closer to 10%. Now in the middle of the day, we are seeing these types of stocks. Most names actually starting to recover a little bit, but still RSI sits closer to 84. So that's quite high. But then again, it's been quite high for quite a while, and yet the stock continues to go up. The 20-day moving average sits at $17.76, the 50-day one at $12.72, and the 200-day one at $7.19. Now, with these types of names, of course, it would be quite a mistake to short. In general, shorting just doesn't make any sense to me, right? The maximum upside when you short is 100%, and that's only if the stock goes to zero, right? If you start shorting meme stocks, bubble stocks, stocks with a lot of momentum, what's the point? You can get burned like this, and what will be the upside? 20%? 50%? Is it not more intelligent to just find companies that can go up by way more, right? Because a company can go up way more than 100%. Point proven here by Soundhound and a lot of quantum names that are up 500% or even 1,000% in just a year. So yeah, this is not me just saying, oh, you have to short this stock. No, I don't short these stocks. This just doesn't make any sense. Yeah, maybe in the short run, you can make a quick 20-30% in a day with these types of names because these are quite volatile. But right now, if you ask me, oh, did you make a mistake by not buying Soundhound AI? Well, clearly yes, because if I did buy it, I would have been up 900, 8,000% this year or 500% in the last couple of months. So that's the mistake, yes. But on the flip side, no, I did not make a mistake because the reason behind what I said previously still stands today. It was extremely expensive. It's now even more expensive. In my eyes, they have no competitive advantage. In my eyes, the fact that NVIDIA is invested in them does not mean much. It's peanuts for NVIDIA. So yeah, congrats to everyone that did make a lot of money with this name. We're in this game to make a lot of money. So hopefully you took some profits. If you still believe this can be a $100 billion company 1,000 years from now, that's up to you. But all in all, did I make a mistake? Yeah, maybe a small one because it's up quite a lot. And no, I don't think it's a drastic mistake because it just didn't make much sense. We've seen these things play out in 2021, right? GameStop, AMC, all these names were also up 500%. Was it a mistake not buying them? No, but it is a pretty big mistake to keep holding them at super high levels. So overall, that's about it. That's just my opinion, of course. Do share yours down in the comment section below, like, subscribe, all of that, and I see you all in the next one. Bye bye.